Alright, good morning. Viewers in YouTube, if you can hear me, please let me know. Alright, good morning. In the chat box, viewers in YouTube, if you can hear me, please let me know.
Crude stocks LCL, 486 contracts.
Viewers in YouTube, if you can hear me, please let me know.
Crude stock 408.
Anybody out there? Let's see. Here we go, messing with my mouse. This software for YouTube. All right. I'm assuming you guys can hear me on YouTube. If anyone's out there, could you please text that you can hear me? That'd be great. Thank you, Mike and Paul, Sherry. Perfect. All right. So a bunch of stuff just fired off. There's been a bunch of stuff in volume events in NQ. You can see it's trying to get up to this liquidity. These are areas where I would normally short longer term. Actually, I forgot. I gotta do the disclaimers first. So let's back up here. Let me get this over here. Sorry about that. Forgot about it. I will be back in 90 seconds.
Risk disclosure statement. There is a risk of loss in trading stocks, ETFs, commodity futures, derivatives, options, forex, and cryptocurrencies. This risk can be substantial, and therefore investors should carefully consider their financial suitability prior to trading. Past performance is not indicative of future performance. The software, strategies, chat rooms, websites, and any associated websites are digital venues for educational purposes only and should not be construed as an express or implied promise or guarantee that you will profit or that losses may be limited in any manner whatsoever. Users of the information accept sole responsibility for the outcomes of their deployment in Wholesale Senate Trader, LLC, and any associated companies, agents, management, owners, and customers harmless without reservation. Please trade responsibly. Commodity Futures Trading Commission, CFTC, Rule 4.41, hypothetical and simulated trading performance results have certain inherent limitations, some of which are described herein. No representation is being made that any account below is likely to achieve profits or losses similar to those shown. In fact, there are frequently sharp differences between hypothetical or simulated performance results and the actual results subsequently achieved by any particular trading program. One of the limitations of hypothetical performance results is that they are generally prepared with the benefit of hindsight. In addition, hypothetical trading does not involve financial risk, and no hypothetical trading record can completely account for the impact of financial risk in actual trading. For example, the ability to withstand losses or adhere to a particular trading program in spite of trading losses are material points which can also adversely affect actual trading results. Because these trades have not actually been executed, the hypothetical results may have under or overcompensated for the impact, if any, of certain market factors such as lack of liquidity. There are numerous other factors related to the markets in general or to the implementation of any specific trading program which cannot be fully accounted for in simulated trading or in the preparation of hypothetical performance results and all of which can adversely affect actual trading results.
Crude iceberg by CL, 151 contracts.
Are not intended to mirror my trades or to give specific trade recommendations. The analysis and setups I share are trades and potential trades that I'm taking for myself.
Crude iceberg by CL, 151 contracts. Soy oil iceberg by CL, 152 contracts.
The spreadsheet you have access to is my personal spreadsheet that I use to enter zone values and ATR values that help me pinpoint exact prices for my trades. You can see when I enter zone prices into the master spreadsheet.
Soy oil stocks LCL, 271 contracts.
Zone prices until you're able to draw the zones correctly yourself. The spreadsheet is not telling you which direction to trade as it has entry prices and stop prices for both long and short positions depending on which way you personally decide to trade. Alrighty, so that didn't I have no way to turn off the alerts during that, so hopefully you read it. Alright, just stuff firing off everywhere. Hold on a second here. So back to NASDAQ. So like I said, I normally would be looking to short in this zone. This is an important inflection zone. Where is my drawer? This was the start of this huge selling tail after the Fed the other day. It came back, retested it, failed again, led to that move. And here we are again. The difference today is the internals. This really messes with my mouse, so bear with me. This software for YouTube. Oh, and the other thing too, if it's too loud, just let me know. There's something with this YouTube software that like amplifies everything, slows down my mouse. So I had complaints a couple weeks ago. No one can hear me talk through the alerts and everything. So I will do my best to turn it down as much as possible. But I definitely need to hear, obviously, what's going on. So this is actually interesting. So I will short here. I didn't see this just happen. So You know, when the market is plus or minus 2,000, that is a trend type day, trend up or trend down, trend up today, or was looking like it. And you can see this just failed here right now. So, and you can see this tick is hitting. Actually, that's not that extreme, but it's still at least showing could get below zero. So, you know, on days that you see plus 2,000 and this tick can't get below zero, you don't want to be shorting. Because, I mean, not that the market can't pull back briefly, but it will be brief. And then there'll be these shallow pullbacks, and then the big moves will be something like that, right? So, but this is interesting that this is failing here, and this is in the exact same zone that I just showed you. So, hopefully I did not miss this trade here. I didn't even get a chance to draw the zone. Alright, so this here was, you had 300 buy stops, 200 sell ice, so this is kind of a delayed double whammy. Double whammy is when you have the dumb money retail trader puke. No offense, I'm a retail trader too. The dumb money puking into the waiting hands of the smart money. The big money is smart money just because they're big money and they can push the markets around. They make themselves smart. So this is a double whammy actually up here. So I like to color my double whammies dark blue. And I will short this. I'm supposed to be shorting this aggressively, meaning as soon as it breaks out of this zone. But I was kind of, wasn't even considering that because I thought we were trend up. But now this is, I'm able to short this. So first and foremost, I got to put the zone prices in my spreadsheet. This is 13.96 a quarter. So this is a spreadsheet proprietary to my trade room. That makes life so much more simple, where you put in these zones, and then it tells you exactly based on the ATR, average shoot range, where you should be entering, exiting, etc. Of course, I can't remember the exact price here. 96 a quarter. And then the bottom of the zone is 78.50. So very important, obviously, the zones, and then the ATR. The current ATR is 18.12, meaning it's rotating about 18 points every 5 minutes. Very, very important. The traders out there, I talk to you about this all the time, that are using these static stops where I like to risk 10 points in NQ to make 20. That kind of nonsense, and it is nonsense because you're not adapting to the volatility. You're not going to be a consistent trader. You need to adapt to the volatility. And the way we have this set up, we're adapting to the volatility. So I can short this at 57.75 aggressively. I can put on 5 contracts. I already missed this trade, like I said, and I knew that just happened. So I'm not gonna chase this. I'll put my order back up at 57.75 to go short there if it gets back up there. But I should have. So you know, we call this an Izzy trade. So these are these trading setups that we're working on in my trade room. I've got about 40 coming up behind it, but we're doing, you know, a few at a time. Actually, I want to show this one because the other stuff's proprietary to my trade room. So this is the inflection zone trade. So it's basically just taking a trade into an important zone, and as soon as you get a volume event, you're in the trade aggressively. So like we just talked about, this is the volume event, and I went to short that aggressively. I missed the trade because I was not on top of it, and of course it's already 15 points in my favor. So I'm not going to chase it. If I miss it, I miss it. I'm hoping, you know, it's very likely it pops back up here. And the other thing too is there is heavy liquidity here that just did not get filled on this first move up. You know, this big money will probably push us back into this liquidity before it does die. But you know, we talk about this every single week. These are magnets, right? This is the big money playing games, and the longer it's been in here, the more they want to get filled. So it's not, you know, novice traders would look at this and be like, oh, I want to short because they want to sell a bunch up here. It's actually the opposite. They want to get filled, and that's why it's been in here forever. So if something positive comes out in the market right now, like a Fed tape bomb, which comes out every other day, and this market does that, well, they want to get filled. So that tells you they're not trying to, you know, scare the market down. They want to get filled. So when they want to get filled, they will get filled. And how I know this is because this is the exact game I used to play as a scalper all day, every day. I used to put, you know, back then 1,000 lots in the order book, I mean, not NASDAQ and ES, and then I would wait for my opening, and I would, test the water, buy a little, and see the market respond, and then I would just step on the gas, and then guys would jump on my coattails, seeing the flurry of buying, and it would run right into my sell order, and I'd be out of the trade. So the same type of stuff is going on here. It's just all games. If you can realize and understand the game, we see the games they're playing with this information, then you are ahead of way
ES
ahead.
Tune Stock Sell ES 583 contracts. NQ Ice Iceberg by NQ 152
All
contracts.
right, there's some more setups now. I think I gotta get out of this. All right, so I was long ES overnight. We'll go over that here shortly.
Kraken files pre-registration
Record
undertaking in
iceberg.
Canada.
That came in at the close yesterday. We'll go over that, but I want to trail my stop. I was waiting for a setup. I got out of some up here when it came up to this liquidity, and it was right around the spot gamma level. Kind of started to fail, and I got out of half. I still have half on, but I will trail that half to this most recent volume setup, and we'll go over all these mechanics and how I do these, on this webinar. But first and foremost, let's get this in. This looks so. You had 583 sell stops. The sell ice is not threshold, so threshold meaning I don't trade these spikes in this, these volume events unless they hit a certain amount, right? So, a lot of traders get Bookmap and they get all giddy and they start trading every spike on this subchart, and that's not prudent. You want to wait for significant volume to come in to trade it. So, and significant volume are my thresholds, and that's from watching thousands and thousands and thousands of these over all these markets. I know what is meaningful, what is not meaningful. So that's what I mean by threshold. So actually this was a stop run. Let's just get this. I try to color just so I know what's going on. Stops are usually yellow or white. Sell ice is black. Buy ice is blue or bluish. Double whammies are dark blue. What am I doing here? Hold on. By the time I get this drawn, the thing's going to be running away from me. All right. So you can see the top of the zone here is 407.850. And the bottom of the zone is 407.4. So we put those in. And then we put in our current ATR, which is a whopping 3.85. I'm being sarcastic. That's not. I would think the way this market's gapped up, the ATR would be higher, but it means just rotating just under 4 points every 5 minutes. All right, so let's first see where we are on the chart. Well, first of all, let me trail my stop. So again, I was long from overnight. We'll go over that here shortly. But based on this new setup, if I were going to go long off this new setup, my stop would be at 69.50. So I'm going to trail my current long that I've been long all night to that price, 69.50. And then we'll talk about how I'm going to possibly trade this current setup and put on a new position. So the first thing you want to do as a trader, you should know all this before the market even opens, where you're at, potential areas of interest, and then when you get your volume event, that is that's your catalyst for the trade, right? So you can see this is actually an IZZY trade as well. So these are zones. These aren't exact prices. I mean, they have exact prices here, but around this zone, if you get a volume event, that is what I consider an inflection zone, an IZZY trade, right? So I can short this aggressively out of this zone. It popped up a little bit above here, but I will still take an IZZY. So not only will I get out of my long, I will turn around and go short at the same exact price. 69.50, right? So this is where I will get in. This is where I go out, get out. I'm basically risking 13.5 points on this trade. And the way I trade these is, this is all from experience, right? Where I get in, I'm forcing this market to get outside of one ATR, because you get these algos that it'll get one ATR and they'll snap it back to the volume event, right? So I'm basically forcing it to get outside of an ATR to even put the trade on. And then when I'm filled, I put my stop an ATR plus 15% above the volume event. So for me to be wrong, it's got to get through the prior volume event where traders just got run over, where they're just holding their breath that it comes back so they can get out of the trade, right? So all these longs that got run over here, if this moves down, they're like, oh, please God, come back and get me out, and that leads to the next wave down. So I'm forcing this market, if I do get short here, I'm forcing this market to get up through the volume event and a full ATR plus 15% for me to be wrong, right? And again, this is all from trading thousands and thousands of these.
NQI Iceberg sell NQ 152 contracts.
There's more ice and NQ over there in a second. This is the best way I've determined to trade it. You can just say, I want to go short right now. You can trade this however you want. I talk about this every week. This is the science. The art is how you trade this. My art, from my experience of trading these for 4 years plus, is this is the best way to do it. And I've learned the hard way, right? So, you can trade them however you want, but I highly recommend if you're new or you're struggling that you trade them my way until you get a little more experience and confidence with it. All right, so I got a trade. So I'm going to put on this Izzy short. That's an aggressive short.
Just taking a look at the fear and greed index.
This is actually the live account. So
45 out of 100, signaling neutral,
I'm
and the
doing these
crypto fear
Apex
and greed
accounts
index.
for each strategy,
60 out
which
of
helps
100,
clarify and
signaling
makes it
greed.
much simpler to keep track of, and we're keeping the stats for each strategy. And it's just so much easier for traders to understand, like, you're just looking for these certain events to happen, or these certain setups, and you're just putting the trade on. You're not having all these conflicting, you have 85 things on your chart type of roadblock in your mind. What am I doing here? Let me put this on before I continue to talk. I can't do two things at one time. All right, I could put on 4 on this account. 69.50. All right. So now I have. I forgot what I was even saying here. I still have my long. I'll move over that here in a second from overnight. So I will stop out at 69.50, and I'm going to short this most recent volume setup at the same exact price, right? So I'm out of my long, and then I'm going short. Different strategies. So overnight, I was long the barf strategy. So it's just any volume setup, blind ATR retest failure. So I was long that from down here, and at the close yesterday on my webinar, we were watching this, and this actually broke the record. This was the record that the most I've ever seen.
NQI Iceberg sell NQ 254 contracts.
Before I get into this, I don't want to miss trades here, so let's see what's going on in NQ. A lot of stuff. So this is a perfect example of a day. So my thresholds in NQ are 150. So if I see 150 stops, 150 ice, I will draw the zones, trade the zones. There are certain days where you're going to see threshold hit many, many times. That means you have to up your threshold for the day, right? It's just, most of the stuff is black and white, but you have to, there's some subjectivity to it where you have to make a judgment call, right? There has been tons of volume events already
At
today.
10:30 a.m. Eastern Time, we get EIA natural
over
gas
150.
change.
So don't
Forecast
use 150 today.
54
I would use a
BCF
minimum
on
200.
the prime,
here
minus
you had,
72 BCF.
just off the open.
Be Nice Iceberg sells ES 186
And there
contracts.
was stuff before that too. So you had 180 right off the open. Then you had another 300. Then you had another almost 200, 178, 257, 217. So do you get my point? Like 150 is not an adequate threshold for today. You have to up your threshold. When I first released my original course, I had the threshold at NASDAQ. It was like a 120. And people, it was a day like today, and people were taking 120s, and they would email me like, I don't understand. I saw 120 14 times. I kept taking the trade, and they weren't working. Well, it's like you answered your own question because you saw 120 14 times. When you're seeing the threshold hit many times and right, off the bat, you got to up it. So I'm going to make my threshold for at least for this morning. What was that? What just got filled there? Hold on a second. Hold on. Let me see what position I have on here. I did my usual left in order in the order book, obviously. Oh, you know what that was? I got filled on the NASDAQ, but I probably shouldn't have put that NASDAQ on. Remember I had that resting sell order in at 50 whatever? Because there's been new setups here. All right, so anyway, I'm using a minimum 250 threshold today. So this is pretty much 250, this last one. So I'm now short, but what I can do is, off of what we were talking about earlier, what I can do is trail my stop to this newest event here. So let me get this going here. All right, so the way you want to draw these zones also is, for you newer peeps on here, so obviously you want to get your bubbles off of the screen. You want to have this last price line, this white line. So you right click on the chart, it'll say configure visible components, if I get off the edit mode, right here, and then bring in your last price line. It's noisy, but it helps you draw the zones pinpoint to pinpoint accuracy instead of trying to draw them to the bubbles like I did for about 4 years, which is not accurate. So you can see, then you want to use your crosshair, click on this crosshair up here, and you want to incorporate all the prices that happen in this spike. Right, so this most recent zone was this 250 sell ice, which I will also color black. I should be using my hotkeys so it's not annoying for the viewers. So there are hotkeys capabilities. We'll maybe go over those a little later if it's slow, but it doesn't look like it's going to be slow today. So, just Google Bookmap Wiki and you can learn all the ins and outs of the basics. So you can see here, I did not bring this zone is not low enough. The spike was still occurring and price went lower than that. So let's just see how low it went. All right, so it looks like the top and bottom are wrong, right? So I got to bring the bottom down. The spike was still occurring. I got to bring it down to at least there. So I get into edit mode, pull this little dot down. That's that. And then to the upside, you
Majority
can see we made it all the way
leader
to
says
there.
Republicans need to separate budget from debt talks.
All the way up to here. So I'm going to do the same thing. Edit, click on the line. There's the dot. Pull it up. So this spike was not part of, this move up was not part of that spike, so it did not make it that high. So the official price of this latest zone is 13,052.75. Hopefully the market waits for me. And that's the top of the zone, and the bottom of the zone was 13,047. Probably should already be stopped out of this short I took. And then the ATR is 19.19. So I was short from a zone from above, but now because this newest setup, I can trail my stop to this, right? So my stop is 74.75, and it's probably already there. Hold on. Yeah, they were right there, just like I thought. Hold on one second.
At 10:30 a.m. Eastern Time, we get the EIA natural gas change. Forecast minus 54 BCF on the prior minus 72 BCF.
Alright, so I took a small loss on that. Hold on, just to make sure I don't have any other positions on here. No, so the only thing I got working now is that possible ES short, but I'm still long on another strategy as well. So we'll go over this here in a second. I just want to see where we're at. So we're still bouncing around this zone in ES.
German economy minister on inflation says the drop is
So again,
big,
what I did
but
here in
won't
NASDAQ,
speak
remember I
of a
wanted to
reverse
short.
trend yet.
We were in that Izzy zone, inflection zone, the Izzy trade. So I wanted to short aggressively out of that. I missed it. I just put my order in, and then we were on other stuff. The market did come back and fill me. So my stop originally was way above this zone. Because the new event came in, that's that, I was able to trail my stop all the way down to an ATR plus 15% above this zone. So I took a small loss, but it's much better than if this market does get up here than taking a loss way up here. And that's how I trail my stops. Most novice traders that don't make money, trail their stop to break even.
NQ stops stopped by NQ. 191 contracts.
All right, so now I got another setup. So I move my stops based on something that's happening in the market, not because I want to force my will on the market. Meaning, because I don't want something to happen, so on and so forth. I let the market tell me where to move my stop to. Sorry, I'm colorblind here, trying to get this accurate. All right. So anyway, I am out of I took a small loss on that short. Now here comes another setup.
NQ Ice Iceberg Sell NQ 161
So
contracts.
this is another double whammy, pretty much in the same zone. You got 200 stops and 168 ice. So this is basically in the same exact zone. So I'll take this same trade again. I just want this liquidity to get their fill like they're going to. This is what I'm talking about, guys. This is you can make a living just waiting for volume setups, and this is actually one of our trades called the Lick trade, L-I-C-K, for the liquidity. We nicknamed it for liquidity trades, where you wait for a volume setup and you get in and you literally just you take it right to the liquidity. It's just, this isn't magic. These are these big traders that put their orders in and then they force the market to the order, just like we talked about. This is the game I played all day, every day as a scalper a long time ago. So, and here's another thing too. This already came up here one time and failed. So, if you, say you put on the lick trade over here and you're long and you're like, oh yeah, we're going to get to that liquidity. If you get up to this liquidity and it starts to run away a little bit, this is where you want to use your bubbles. You start to see the red bubbles. I would be getting out at least some, because yes, it will fill eventually like it just did right there, but you have to endure this torture treatment. So if you get up to you get to liquidity and it struggles, I would be getting out of some. So that's exactly what I did this morning with that long trade I had on overnight. If you see right here, at the time, it came up here and it started struggling. This was liquidity that was there overnight. It came here and I saw that and I got out of half, right? It eventually came back here, but the point is, it did fill this liquidity, but it couldn't clear it. So I got out. And, I saved myself the torture of watching this move down 10 plus points with a full position on. So, yes, liquidity is a magnet, but first attempt, the whole reason that happens is because these algos pick up this large size in the order book and they will run it away from it, right? Well, that's why these big
1
money,
minute remaining.
These big entities that trade huge size have to hide their orders, because if they drop in a 500 lot in the order book, these algos run it away from the order, right? So it's the same thing. So the algos can't tell the difference between if someone just drops in a 300 lot right now versus if a 300 lot's been sitting there. So when the market gets near that order, the algos pick it up and they try to run it away. They try to force this person to chase. Well, we know this person's not chasing anything because they've been sitting here for hours and hours and hours. But the point is, if you understand these algos will run it away, don't torture yourself. If you're playing for that liquidity to get out of some, don't torture yourself and wait and say, I'm not getting out to this fills, because you will be tortured many times. It will fill eventually. It could be 6 hours from now though. So anyway, these guys got their
10
fill,
seconds.
which is good. Now we may be free to sell off because we can't go down until the big money gets their way. So this is this zone. It's a little bit above it. I will still play this as
Minus
an
47 BCF, minus 47 BCF. A build on the forecast of minus 54 BCF.
And this is a new volume setup, so let's just make sure it's accurate with the prices, and then I'll try to answer some questions. So this, remember I said I'm upping my threshold to 200 for today, at least this morning in NASDAQ. This wasn't 200, but this was, right? So these combined, this is an area where there are invested traders, and that's all we're looking for with these setups, right? So we're looking for investment by traders, or traders that are loaded up, and then when it moves out of here, we take advantage of that move. It's very simplistic, but that's what's going on in these markets, and you're taking advantage of that. I'm not using 85 indicators. I'm using real-time volume that's telling me which way where the traders are taking positions, large positions, and where they're wrong. And I base all that with my strategies and my ATR and everything else. So let's get this drawn. And I'll go over that ES trade, and I never got filled on that short yet, so, and I'm still long from this morning, or last night. Alright, so this gets a little confusing because I have these different colors, so let me just get rid of that, or the same color, I mean. I didn't see that. Let's see here. Alright, so there's more liquidity here. It's more coming in. It's been in there for a while. I would consider this tradable liquidity to get to. But if you see liquidity just pop in the order book, I don't count that as meaningful liquidity. It's just people screwing with the market, right? What was I gonna- All right, so let's just get the zone in. I may be going long here too, so I have different strategies. The Izzy trade here is a fade trade, and by the way, this is showing that we're probably going to rip right through here, right? So this is tick strike. We'll talk about that here in a little bit too. First and foremost, let's get this set up. 1309.9250 is the top of the zone. Sorry if it feels like I'm all over the place, because I am, because there's a lot going on right now. And it's real hard to do all this on one screen and not make mistakes and miss stuff and so on and so forth. 84 quarter, this is the bottom of the zone. ATR is 19.95. It's just rotating about 20 points every 5 minutes. All right, so to make this a long setup, I demand it gets an ATR out of that zone, right? So that would one ATR validation price is 13.112.50. So the minute that touches 13.112.50, this is officially a bullish setup. Didn't quite get there yet. And any kind of short setups are off the table, and I'm just looking for longs. So right here, let's see where we are in our. I already know we're pretty much at the Izzy, and we're kind of through that Izzy zone. Let me get rid of all this stuff. We'll go over that later too. That's Apex, and those are each one of those accounts that I was telling you about for the trading strategies. All right, so what's important here is we are in an Izzy, an inflection zone. This is close to red lug. This is close to extreme standard deviation of VWAP as well. So this is actually a pretty good area to short. Does it mean I won't take it long for certain strategies? No. So this BARF strategy is the blind ATR retest failure, right? So this is the most active strategy, right? So, and I do this to show that the edge is inherent just in this strategy, just in the way the market, when you get the volume events, that's the edge. When you can apply this, so I'm showing my room, you can trade these BARF trades, we call them, right? Blind ATR retest failure. We name them funny names too, so they're memorable. Waiting for ATR retest failure, you take the trade. Waiting for ATR retest failure, you take the trade. Obviously, this is the most active because you're just basically trading every single volume event. But there is still an edge. This is a profitable trade over a series, and I proved this not last December, the December before, to my trade room. I did this for 1 month. I didn't care where we were at. I didn't on the lugs, on the charts, no indicators. All I did was wait for ATR retest failure, and it was a profitable trade for the month. It made like 13 grand trading like ones and twos, right? So the point is, you don't have to trade BARF because it's very aggressive and it's very active, and it's not the best winning percentage. It won't be the best winning percentage out of all those strategies. But the point is, if you can get these volume events in an area that you deem important, then you have an extreme edge, right? So you already know what you look at. Say you trade Bollinger Bands or even the Ludwig levels or whatever. Yeah, they're strong on their own at certain times, but if you can add a volume event there, that makes the edge extra strong, extra special, if you will, right? So that's the BARF. So these are the different strategies that I would trade. So if we move a little higher here, I'd be looking for a slug, a stop run, and a major lug in NASDAQ. The liquidity trades where we take the trade, where we get a volume event, and we just trade straight to the liquidity, where our target is the liquidity. Inflection zones, the Izzy. We talked about the BARF. The Dumb and Dumber, aggressive opposite delta. We haven't talked about that yet. Let's just see if that's in play. So that's where I'm looking for extreme standard deviation of VWAP, right? Which we're at, or we were. And that's why, see, guys, this is what goes on all day long. You have these algos. When you get to extreme standard deviation, they snap it back, trying to get back to the mean. And you can see which is VWAP, right? Snap back, they just did it again. So we are taking advantage in certain situations of these algos that play these games, right? So instead of fighting algos and saying trading is impossible and it's manipulated and it's 90% of the trade is algos, blah, 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 we're taking advantage of it, right? If you can't beat them, join them. So knowing all this, these are different strategies that I will take. So right now, the only thing that's really in play with this last setup is just a barf trade. So there's not, well, this could be a dada. Let's see. So what I didn't explain this one. So dada is where you get, yeah, I guess this is a dada. So I could take the dada short here too. So dada is extreme standard deviation of VWAP with a volume event, a stop run, not a volume event, a stop run at extreme standard deviation of VWAP with a diverging delta. So this isn't a crazy divergence, but you can see this market made a higher high and this cumulative volume did not. What is this? This is just CVD, cumulative delta bars. It's just showing you who the aggressor is. I don't use the terms, there's more buyers than sellers, more sellers than buyers. There's no such thing. There has to be another side of the trade, right? But it just means who's the aggressor, meaning they're taking bids more, they're taking offers more aggressively than bids, or they're hitting bids more aggressively than taking offers. That's what this is showing you, who the aggressor is, right? So you can see as this made a higher high, the buyers were not being as aggressive, right? So this is an official dada trade too, if this doesn't get an ATR above here. Did it? I came real close. Let's see here. You want to keep adjusting this too if this changes. This is up to 20.18. All right, so did that get to, at the time it was like 11 something, right? I don't think we got up there. All right, so this is still an official, not an official long setup, so I can still take shorts is what I'm saying. So for the way I trade, if this market is able to push an ATR outside of the zone, this can only be a bullish trade for me. I will not take shorts. This did not get an ATR, so I can still take my shorts. So the trades I will take now, the BARF, blind ATR retest failure, I still have to wait for ATR retest failure to go short, but the dada trade is an aggressive trade, right? So that is this Dumb and Dumber aggressive opposite delta trade. So
NQ Ice Iceberg by NQ 151 contracts.
That's got to come in to make it more confusing for you guys, but I'm still going to trade this setup, but I could potentially trail my stop to this new setup coming in. So you may be confused, and again, I understand newer traders in here, it feels like you're drinking out of a water hose. What I'm doing is not that it's not that complicated, right? It's just a lot right now if you're new.
Crude Ice Iceberg sell CL 151
I guess
contracts.
I'm in crude too. So anyway, to short this, I can short aggressively for the dada strategy. 13,061, I can put on 5 MNQ based on, so each one of these accounts I'm risking 500. So I'm doing the Apex, that's this here. So I'm doing the $150,000 account, which is really only a $5,000 account because you can't lose more than $5,000.
NQ Ice Iceberg by NQ 155 contracts.
All right, so there's still stuff firing in here. But by the way, hold on, I may have missed this long opportunity in ES. Let's see what that validation price was. So to go long, let's just make sure this is still accurate. It's actually 4.078 now. All right, so did this get to 82.50 first and foremost? Yes, it did. All right, so this is the BARF, if anything, right? Why? Volume event, ATR. Here's your retest that happens pretty much every time, feels like. We actually have a strategy for that. That's this strategy where we play for that. So I could be long this. I'm already missing this 83.25. And I could I'll put on 8. So sorry, I was not covering that, but that's what I'm going to do. 83.25, and that is BARF. That's number 52, 83.25. All right, so I was already long BARF from last night. Now we'll go over that if I can ever get over there. And now I just added to that trade because this is a brand new setup. Remember, my stop for that was down here. This is officially a bullish setup. And actually, I could put on the lick trade too. Just saw that. So hold on. Let me put that on as well. All right. So now I'm long 2 strategies in ES. The BARF is just any volume event, ATR, retest, failure. Then what I did is I put on the lick trade as well. That's where I trade in the direction of liquidity if the volume setup occurs, and that's a conservative entry type trade too, where I play ATR, retest, failure on that. So I've got 2 longs on now ES. So the lick trade It's only 7 points away, and I'm fully aware that actually there's more up here. So so this will be a good example. As we get up here, we'll watch how this reacts to this liquidity. So I'm not going to get it for the lick trade that I just put on. I won't get out of all of them here because you got this band up here too. But I'll watch this. If it struggles, this is where you want to use your bubbles, and we're going to use tick strike up here. We'll keep an eye on this, and I'll decide how I'm going to get out of the lick trade, or if I'm going to let it try to plow through there and get up to this 4,100 liquidity. But either way, I'm long both strategies there. And Q, I forgot what I was even doing here. I don't think I put anything in here yet, did I? I was going to put on Dada, right? So hold on here. You can see there's all this new ice is coming in here too. So hold on a second. 170, 167. All right, so this is what I'm going to do here. Hold on, I'm going to put the Dada short in, and then I'm going to draw that new volume event, and then I can actually trail my stop to that if I get filled. So let's just look at this one more time. Make sure your ATR is right. So as long as this market doesn't touch 1275, my short, I still have a potential to short this first volume event that came in over here that we just drew. This one right here, right? I don't think it was this threshold here. No. All right, so that's what I'm going to potentially take the Dada. So you can see I can have different strategies. I could be short NASDAQ, long ES. It doesn't matter. In trading this way, it's not conflicting where you're like, which I've done for many years because I've had all these in my head, and even on my webinars, I'm like, well, I want to go long here, but then we have this, and this is what most traders go through, right? This conflicting thought process where they can't put on a trade because there are 85 indicators on the chart. 42 of them say go long, 37 of them say go short, and they sit here frozen and don't do anything, right? So with the way we're doing these is, I don't care if I see a slug, I don't care if there's bands and bands of liquidity above. If I see a slug, a stop run into a major lug, like
Oil prices
maybe in a second,
gains,
I'm taking that short.
Rises $1
That's just one trading strategy. So if you can set it up this way, either on Apex or if you have your own brokerage account, you can set up different brokerage accounts and just trade these individually, and it just takes out so much of the conflict of your trading. It's just like you don't question it. You're like, if I see that, I'm taking that. If I see that, I'm taking that, right? So, and these are all inherent where, say I get short that, right? And then I get a lick trade that turns bullish. Well, say there's liquidity up here, and I get short this trade, this slug. And then it moves down a lower, and I get a new setup that's long. Well, guess what? The way I have this structured, the way I trade these zones, is the minute this breaks an ATR out of the new volume event, I would be out of this trade anyway. So I wouldn't be short one and long another. You know what I'm saying? So that's the beauty of the system as well. You're not going to have conflict, especially on Apex. You can't have conflicting. Conflicting things on anyway. Conflicting positions. So anyway, quickly for this. This is on my website. I believe the code's Pulcini 50, and it gives you the discount. I think they had a sale. I think it's ended today. It always seems like another one comes out, but they claim there's not going to be another one for a while. So that gives you 80% off of that. So instead of paying the whatever that one is, so I'm doing the 150s on most of these, the 150. But you can do any of these, but it gives you 80% off of that price. So I think it's Pulcini 50. So this is all on my website, guys. You go to my website and you'll get all discounts to all this stuff. Discounts to Bookmap, Global Plus. There's your Apex. Click on that. I think the code, there you go, right there. That's the code. So we'll get into the Apex stuff a little bit. it's
Soy oil ice iceberg sells EL 150 for contracts.
So I've done, back in the day, right when I got pretty much knocked out of trading, I was trying to get funded because I was not at a trading firm anymore, and I did I did one, it's still out there, but I'm not going to name names. But these most of the, now these they're coming out of the woodwork, right? Because if you think about it, this is a great business model, right? 95% of traders fail. Well, wouldn't it be smart to come up with a business model where you take advantage of traders failing? So, Apex does obviously charge for this stuff, but they are interested in actually funding traders, and that's why I endorse them. Right? There's plenty out there that I can endorse. This was recommended to me from a veteran trader, and I confirmed with him because I had a bad experience with the other one where I knew they didn't want to fund traders. They were just looking to milk traders out of their account because I would qualify for the tryout. It was named a different name. I don't want to name the name because then you'll know exactly what I'm talking about. Then I would pass that. Then they go, okay, now you got to do a live tryout with a live account. And I would pass that. Then they'd be like, okay, now you got to do a secret squirrel double secret probation account. It's just like that shows me that they were not interested in funding traders, right? They're interested in taking money from traders that don't make it. So again, I put my name on this company, on this trading company. I can't think of the word, but I endorse it. So, and I'm trading them. When this came out, I just started this last year. I did my own accounts, my own tryouts to show my trading room that one, they give you an account to trade, and then they pay. I've been paid by them as well on certain accounts, so they are legit. I put my name on it. And like I tell my room that everyone gets all nervous. There's always going to be a bad app, like someone that feels like they're jaded, like I made a bunch of money on a number and they didn't pay me. You're going to see negative reviews, but trust me, if they weren't paying people in this day and age with the internet, you'll know in about 5 seconds on Twitter and all over the place if they're not doing what they say they're going to do. So like I said, I've been paid by them. I stand behind it. I'm not affiliated with them as far as I'm not part of the company, right? But this is the best thing you can do as a trader if you are struggling, if you don't want to trade your own money. It is a night and day trading your own money versus trading someone else's money, right? That's why, as a trading, when you're at a trading firm, it's just night and day. And I'm a perfect example. So when I had a trading firm backing me, made millions of dollars. Then I stopped making money right around 2006, 2007. Actually, it was late 2005, 2006. And then I had enough money at the time where I thought I can back myself. As soon as you start trading on your own, it's a whole different story where you've got to pay your mortgage and your car, your kids' education. You do not think the same way when you're trading. You start to trade scared. And when you trade scared, you gamble scared, whatever, you are not going to make money. I can guarantee it, right? So that is the benefit of using something like that, where if you're working on your trading, you're working on these strategies, even if you come to my room and you're like, hey, I want to do exactly what Scott's doing. Well, fine. Do it like this where you're not risking your own money. You're only risking a very small amount, right? Like for right now, the $150,000 account is like $60 to get to potentially get funded, right? So you practice all these on these different accounts, and if you blow out, big deal. You got to end up another $60. And if you do well, then you're funded, and then you're not trading your own money anyway. So it's a no-brainer to me. And I started doing these because I wasn't going to fund all these accounts with my own money, because one of the main reasons is because I make so many mistakes when I'm on the webinars and I forget orders. It's like, if I do blow out these accounts live, yeah, it hurts. I got to go through the whole process again. It's only 7 days to get qualified or whatever, but I'm not blowing out my own accounts on mistakes, so on and so forth. And this is just so much easier for me to keep track of all the stats. Actually, I don't have this up. Yeah, I do. So then I bring, we haven't brought this up. We're doing this once a month to keep track of the stats, but this is another thing I should have. There's discounts on this on my website as well. But you keep track of all your trades. And so all those strategies, we're going to have the exact, over the next month, 2 months, 6 months, you're going to know the exact winning percentage for all these strategies as well. So, all right, so that's my spiel on that. Did I get filled on that? Okay, yeah, so I did get filled. I am filled here on the ES, so my stop's going to go. So I'm long the BARF trade. I was already long the BARF from overnight, and I just added to that. So my stop's here. My short, remember I was going to short aggressively off of that Izzy. That is canceled because this got a full ATR above there. So all I'm really working now is to stop out down at, I'm long lick too, right? So I took the lick trade and I took the BARF trade, ATR retest failure, and I took the lick trade playing for this liquidity up here and up here. Same thing. So I have both my stops are going to be down here. Let's just see where that is. So once I get filled, I don't mess around with the ATR. Whatever the ATR was when I got filled, that's where my stop is. So that stop is 69.25. So let me put that in. And I'll try to answer some questions. Nothing there. All right. So just quickly, you know, I'm not putting on live trades on the webinars anymore. Just better for compliance, and there's no need. I'm talking you guys through exactly what I'm doing. But this is the trade I had on overnight, and I just added to it, right? So you can see this is a decent profit for trading micros, right? So I had 7 on. Oh, I had 13 on overnight. I got out of half like I told you, and then I just put on another 7. So that's the current P&L, and that's what I have on, right? So that's for the BARF trade. And if it comes down to 69, then I'm stopped out. But it's still a profitable trade overall. All right, I gotta just decide if I'm gonna put on this dad trade or not. Let's just see the internals here if we popped up. No, it's still not trend up. But something to note, this thing cannot break minus 500 tick, which is not, you're not gonna see major sell-offs if this thing can't start hitting extreme tick readings, 1,000 or more, right? Doesn't mean it can't pull back and sell off a little bit, but you're not going to see like some huge down move if this thing doesn't start hitting extremes. Same with you can see Nasdaq's barely touched negative 500 in like once, so that is not bearish overall. It doesn't mean this is not, you know, I don't, just because the tick's not doing something, you don't see that in my, well, I don't have my trade, I don't have the actual descriptions of these because it's proprietary in my trade room, but you guys are seeing what I do. But the point is, I don't have that as part of my trade plan. So if I just see these, I take them. I don't say, well, tick. I'm trying to take out as much subjectivity as possible, right? I'm like, well, tick's not making a low, so I don't know if I want to take this dad trade, right? If I get the conditions for dad, which we just talked about, I'll put on the trade. So let me hurry up and do that since I still haven't put that order in. And then I'll try to answer some questions here on YouTube. Let's go over to NASDAQ. This was that zone. There's been a new zone since then, but I'm going to show you what I do with that. Let me just make sure this is current. Yeah, it's 20.02. All right, so the dad trade is in play. That's a shorting. That's a short aggressively. Short is 61 quarter. I could put on 5. So dad is number 41. So dad I think is the closest to getting funded. Let's take a look here. So these two blew out. So it's very easy to blow out. So this teaches you another great thing about the AVIX is it teaches you to trade correctly as far as your risk, right? So it's always it's a trailing stop. So until you're funded. So if I've had this happen multiple times. It actually happened with one of these too, where I was up like, you know, when I first did this, I was up like 3 different times. I was up like 7-8 grand, and then I would have a routine drawdown, which you're going to have trading, and I would lose back 5, so I'd still be up 3,000, and I blew out of the account. And I'm like, that's not very good. But it teaches you that you got to control your size so you don't pull back $5,000. So even though I was profitable, I lose the account, and I got to re-ante the $60 or whatever. But anyway, so 41, yeah. So that one's up $3,700. And then there's another one that's close to being funded here. This one here is I'm only $2,500 away from that one. That is 44. What's that one? That's the slug. So the slug's the most profitable right now. But I'll bet anything because I know I have the most powerful edge you can possibly have, that all these will be profitable and they'll all be live here soon. So this one's live. This one's the Izzy trade. I did that I tried out the 50,000 account, so that's what this is, but that's up $1,600. This is a live one too. So this one's close to getting funded. This one's halfway there. This one's up a little. That one I need to trade more. I got to pay more attention. That's one of the strategies that I haven't been on top of. And then this one, this is the BARF. That's the one I'm currently long, the ES. And then this is the new slug. So, I mean, not slug. Lick. All right, so why was I looking at that again? Can't remember. Okay, so anyway, oh yeah, because I wanted to see. I thought the dad was the one that was close to getting funded, but dad's halfway there. All right, so anyway, 61.25 is where I will short this. That's still 25 points away, so I'll put on a 5 lot. That's number 52. And if it comes down to 61.25, I am short the data setup. Other than that, I'm currently long. Oh, and then the other thing I want to do too is if I do get filled, I'm going to draw my, let's just draw this now. So I already have that in. So here's a good, this is what I was trying to show you guys, right? So if I get filled on that short based on that first setup, my stop would be, so I'll short at 61.25. My stop's at 115.50, 13.115.50, right? Now with the new setup that's come in since this, I can still short off of that setup, but I can trail my stop to this newest stuff, right? And I know I said 200 is my threshold for today, or at least this morning, but these are back to back to back, and this is very likely one house, so I'm going to incorporate all three of these, which is over 400 dice. So what I'm going to do is I'm just going to get rid of this, because this is pretty much in the same area, and then I'm going to draw a zone to this, and you're going to see how I can trail my stop if I do get filled on that short to this newest event. And this is the last thing that's basically happened here. So that looks like that's correct. So I got all the prices. Use your crosshair, cover all the prices in these spikes. You can just see it as you go across, right? So that new zone is 13.090 down to 079.50. So we'll see how this changes for my stop.
The French banks are challenging the tax authorities after the raids.
That's okay. 13.079.50. ATRs 19.39. So this isn't a great example because the zone's actually in the same exact spot. So I was going to stop out at 13.115. Well, I can move it down a whopping 2.75 points. Big deal. But the point is, if this moved lower, or it could still move lower, right? So say I got this short working in here, which I do. Right there. Wrong color. Hold on. And this comes down, and it fills me, starts moving down, and a new volume setup comes in. Well, then I can trail my stop to this new setup, which would be like right here versus all the way up here. And that's how I trail my stops. Not because I want to break even, not because I want to save profit, whatever. I base my stops on something that occurs in the market. All right, so no fill there, and I'm still long ES here, lick, and barf. So waiting to see what happens there. Now it seems like paint's drying quickly, and then I'll try to get to some questions. There was a setup here in crude. You had 500 stops. That's a lot. Hopefully I didn't miss this trade. So let's draw this zone. So you're better off just drawing the lines and then getting or staying in edit mode.
Net gas iceberg by NG. 151 contracts.
You can just move the lines around, but because I gotta pull it over to see if that's
net gas iceberg by NG. 151 contracts.
Right, looks like we're trading that gas too. So this incorporated all those spikes. Sorry if I'm.
US Treasury to auction $48 billion in 6
Right, so my
month
point
bills
is you draw the
and
zones
$57
and then you
billion
just put the lines on the
in
chart,
3
and
month
you come
bills.
in edit them and then just drag them over instead of having to get back out of edit mode, pull the screen over, find how far it went. Right. And again, I complain about these 1982 Atari drawing tools forever. They hear me, but it still hasn't been fixed yet. So, all right. So it looks like I just missed a trade here. 73.36 down to 73.17 is your zone. So we'll head over here to crude, and we'll see where we're at bigger picture. That wasn't the zone. What was it? Yeah, 36, 73.17. And 21.9 or 0.219 just means it's rotating about 22 ticks every 5 minutes. Very, very, very important as far as risk and everything else. All right, so this is clearly a long setup already. All right, so if this market touched 73.58, it was a long. It went well beyond that, right? So I'm hoping I didn't miss an aggressive trade here. The barf's always in play, like I said, always, always, and forever. Any volume setup that goes ATR or more in a retest of failure, I will take that trade. The lick trades is in play here too. You see all this liquidity sitting here. Quite a shocker. This one got filled. So if I get lucky enough and it comes like this, I will take the lick trade 2 to go fill that. That's been in here since basically the open, about an hour into the open. All right, bigger picture. I'm sure I missed a trade here somehow because that's how it works for me. So no, I mean this is a potential IZZY if I get a short setup in here. The long is not an IZZY because the IZZYs are fade trades, right? So the stop run actually happened here anyway. But if I got a long setup here, that's not an IZZY. That is, IZZYs are fade trades. So basically all I see here is the barf trade, barf long, and the lick long are the only trading strategies that I will take. Let's just take a look at here. So there's another example of these algos, extreme VWAP standard deviation algos, snapping it back, right? That's why we have strategies for that. And it bounced right off the baby lug too. So these are the major lugs. These are Ludwig levels. That's not on my website. You can go to our site. I say this every webinar, but it's ludwiglevels.com. I make fun of her website all the time. She doesn't care. Come in here, put in your name, say you saw the Bookmap webinar, you get a 3-day trial, and you get special pricing if you decide to subscribe. All right, so anyway, there's like the most powerful thing I've ever seen in my trading, futures trading. I've been using it for 2 years now. They are absolutely ridiculous as far as support and resistance, you know, playing fades and coming up with context when it draws new lugs, so on and so forth. So you guys hear me talk about them every webinar. I don't bring in new things into my trading very lightly. It's not new now, but at the time I had one of my traders that I was mentoring. He just kept raving about him, and I'm just like, you know, I just figured it was another indicator, and then I finally started watching them, and I was like, holy crap, these things are ridiculous. So they are a big part of my trading, and we actually have strategies like this, the slug, that I trade off of them, right? All right. Let's see if we get some. So basically, I'm just waiting for retest failure of this zone if I get it. So this is the point, right? Like for the way I trade, I demand that for what I'm going to do for these strategies. Is there a chance this doesn't come back and it just goes like this? Absolutely. But you know, from trading thousands of these, like I keep saying, I just know the best way to trade these is if I don't want to be aggressive. And there is nothing on that chart. There is nothing on this chart that tells me I want to be aggressive long right here. So I'm willing to accept the market just ripping higher from here, because this actually, if anything, it's looking like a short because it's still in this IZZY. This is a bearish market on top of it, right? All it's doing is coming back to the bottom of this balance. This is not a bullish, you know, long-term bullish where I have to get in long aggressively, right? So that's why I wait for the retest failure. I may not get it. If I don't get it, there'll be another setup right around the corner, and I'll get long on that one, right? All right, so just being tortured here in ES. Let's see if there's any questions in YouTube here. Wow, there's a lot. Sorry. Let's see here. How do you calculate ATR again? I don't calculate ATR. The Thinkorswim. This is just a 14-period Wilders, right there. ATR 14-period Wilders on a 5-minute chart. Google Wilders ATR. It tells you all about it. This is the default on Thinkorswim. So I don't calculate anything. I use the 5-minute ATR for every market. I can tell you know exactly what you're doing. Yeah, I've been doing it for a little bit, about 25 years. And the ES trades, yes, we're long ES. I know some of these were from a long time ago, so I'm sorry, I'm just getting them now. If we go to Apex, I have to trade with Ninja Trader? No, you can trade. I trade directly. So like I showed that, I trade directly through, you need Rhythmic, and that's part of it. They give you the Rhythmic data feed, right? But I trade directly through the Rhythmic Dome, depth of market, right? So no, you don't need Ninja Trader. That's why I use a static account, no trailing drawdown. Yeah, you can. They've got the different accounts there. Again, you can do all these. You got to read up on them. Again, I don't claim to be an expert on all these. I just plugged it in and did the 150, and that's all I'm doing. But you got the static here. I'm telling you, if I put my name on it, then that should be enough for you guys. But if you want to go research it yourself, go ahead. You know, like I said, if they weren't legit, you would know in about 5 seconds. And I've been doing it for over a year now, so different accounts with them. What's your thoughts on discretionary trading, Scott, as far as what? Cop logic. What do you mean without rules? No, you have no chance, right? So I was the biggest discretionary trader of all time, basically as a scalper, not of all time. You know what I mean? And that's how I made millions of dollars, where I was just flipping orders in the order book, judging the order flow, not even really looking at charts, right? But you have to have rules in your trading if that's what you're asking me. But you can expand on that if you want, and I'll try to answer it. Didn't mean how you calculate ATR. Was referring to what time frame you use for ATR settings. Yeah, 5 minute mark for each market. You have some way to copy your trades on different accounts using Bookmap. You mean for Apex? No, that if you wanted, they do have the trade copier, and there's multiple people in my trade room that are doing that, where you can trade it across. Some guys with like 15 accounts. You need NinjaTrader for that. So I actually have to get that. I may eventually move over Thinkorswim to NinjaTrader. I don't have the time right now to learn a brand new software. So, all right. So that's all the questions in there. So this is what I was getting to earlier. So yesterday at the close in this little zone here that I actually drew the zone to this morning, we saw about 16,000 plus buy ice come in here. This was the record up until then. It was like 15,000, the most I've ever seen, and then we saw 15,000. So we had the barf setup. So there was actually I didn't take it. What did I do? So I took it after the Globex reopened because I was still waiting. So there was a bunch of ice, and I was waiting for the ATR, which we got. Then I was waiting for a retest and a failure, and I finally got it, and I got in last night. And then I showed you where I got out. I still have half of them on, but it was all based on this whopper, insane 16,000 buy ice. So mark this zone down, and this
Soy
is a
oil
very
ice iceberg by
tradable
ZL.
zone on a
155 contracts.
It's going to give you information in both ways. If it comes back there, that's going to be a great opportunity to get long, potentially, if you get a volume setup. If this market comes back and melts right through this zone, that's giving you incredible information too, and we're probably going to zero, which I've been hoping for many years now. One of these days it'll happen. What I tell my room is if it happens, we're probably in a nuclear war, and that probably won't be good, but at least I'll see zero, potentially, before I'm gone. Not making light of nuclear war, but you know what I mean. If this market goes to zero for real, we're all in big trouble. But I can still cheer for it to actually be realistic. Like this is, I tell my trade room this every day lately. It's a perfect example of not trying to impose what you think should be going on in these markets. You just adapt to what you're seeing, right? After the bank meltdown and everything else that's going on in this world, inflation, blah, 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 earnings coming in poorly, all that stuff, you think we'd be down here. Instead, we're rallying to trying to get to highs. Like, it makes no sense. It doesn't need to make sense. It doesn't matter if it makes sense to you. What matters is what you're seeing here. So you trade what you see, not what you think, right? I say it too all the time. What's the saying? The markets can stay irrational much longer than you can stay solvent, right? So just remember that. It doesn't matter what you think should happen. Let the markets tell you what is happening, right? So right now, like, I'm painfully long, yes, right? I mean, I think this market should be at 3,000. It doesn't matter what I think. It matters what the market thinks. So I trade what I see.
Crude ice iceberg sell CL. 151 contracts.
All right, so I never got a retest of that zone. You got some new sell ice coming in here in CL, but this is what I was talking about, right? I mean, this liquidity just got filled, but there's a whole other band up here. So, if I don't get that one, then I got a brand new setup. I draw my zone. I do the same exact thing I was going to do down there. All right? So this was not threshold, but this was 171. 150 is my threshold in crude. What time did I start? Oh yeah, I got plenty of time. I started at 7. Yeah, I got till. I'm so screwed up with this time change. Arizona doesn't change, and it's just a big pain in the ass. So yeah, I've only been on for a little over an hour. 9:30 is when the other dude starts for Bookmap. All right, so this was a nice clear zone here, right? 74.31. Down to 74.22. So we'll go over the trading strategies that I may take here. 74.21. Is that what I said? No, 31 down to 22. Got a real good short-term memory. not. All right, that's that. And then 0.224 is your ATR. All right, so first and foremost, to make this a long setup, all the prices are in here. That's the beauty of this thing. I don't have to eyeball it anymore. It's like black and white. Thank you, George Labrada, for helping build this thing. He's one of the traders in the trade room. He's actually
NQ
my
stocks
moderator now.
stopped by NQ. 226
All right,
contracts.
this is a possible slug. We'll come back to CL. This is a possible slug, and I already know that because this is what you need to know if you're trading all your areas. So when stuff starts firing off, you're not scrambling to figure out what's going on, where we're at. It's not quite there yet, but this is a slug because it could touch this slug. So here's the volume event. I'll bring it up in a second. That won't be a full ATR if it touches and then fails. So this is a slug, right? If to get to the lug, it's a full ATR from the volume event, then it's not a slug because that would be a bullish setup. See what I'm saying? So I never shorted this, by the way, and I'm still on. Let's see. Is ES actually going to move? Like Nasdaq's ripping.
NQ
ES is
iceberg
just
by
sitting. Look at
NQ.
this. That's not a good
151
sign, by the way,
contracts.
just so you guys know, it's not rocket science to figure that out. But plus, this thing's been going crazy, and ES is just rotating. So anyway, I'm probably missing a trade here as we talk. You got to be quick with Nasdaq, right? This is the problem doing on one screen. This is an aggressive entry, so I got to be in like immediately here. That started there. I have a feeling those ES trades are going to take it on the chin, but it is what it is, guys. Trading is probabilities. If you have an edge, you just keep taking them. You keep taking them. You keep taking them. And over the long run, you will make money. Short run, you're going to have losers. That's just the way trading works. If anyone tells you anything different, run as fast as you can from them. If anyone tells you they're 80% traders, 70, even 70%, 70% is okay. I mean, it's hard to do with position trading, but they tell you they're 80% or whatever, you just laugh at them and run the other way because they're full of shit. Pardon my language. 13.1175 over long term. I'm talking, not a day or a week. I'm talking over months. If you're an 80% trader, you are a savant. I mean, if you're not, I'm not talking about 2-tick scalps, stuff like that. I'm talking about position trading. All right, this obviously is not correct because it's not on an exact price. So what did I do wrong here? I'm sure Nasdaq will wait for me here too. So I gotta move it up. So I know you guys are saying, well, the sweep started here. Yeah, but the price already traded here once. This is a good education here. It already traded here and it didn't cause that stop run. So there's no way that price caused that stop run. It was this price. Once that triggered, then it. So the sweeps did start here, but that's not where the stops were because the sweeps have first right to the orders. So the sweeps don't have to be the stops. So somebody actually, I take that back because I didn't see that. But it is a good example of how you draw these zones. It's not always the exact, line. Hold on here. That was only 38 though. I'm gonna keep it like this because this is where the threshold came in or started to pick up. So I'll keep it there. 106 quarter. Some of the stuff is subjective, guys. It's not. I mean, most of it's black and white, like that crude zone I just drew. It was like slap you in the face, very easy. Some of these are not. It's harder to decipher, and it's just trading. It's not. It is what it is. Like if you can't figure out the zone, then don't trade the area, right? Make your best judgment. Most of it's black and white. But like this one, it's like it started and it was like 40 lots, not even, right here, like 13, 38, 38, and then it spiked, right? Do I really need to draw this down another however many points? It's only 4 points, I guess, but I think that's an accurate zone, and that's where these sweeps started too. So 106 quarter. I'm going to miss this trade. I think I already missed this trade. And I'm going to be stopped out of my long and not have the short on. So the short aggressively is 84. For the slug, I could put on 5. That's not there yet. Good. All right, so slug is number... slug is number 44. I get short at 84. It's almost there right now. That's not the right account. This is the problem. I'm on different computers. All right. So So I'm about to be short slug. This is the highest winning percentage of the strategies as of right now. They'll all be pretty similar. Barf will probably be a little lower, obviously, because it's such an active trade. So I'm doing, actually, I don't want to fill this either. I'm going to show you guys something too. So I'm going to move this out of this zone. I'm not going to fill in the middle of the zone. I'm going to risk another 4 points and get out of the zone, 5 points. So I'm going to put my short at 79 versus 84. This doesn't happen very often either, but I don't like to stop out or fill in the middle of prior volume events. I'm forcing this market to push through this volume event, then I'll go short, right? Because this is very likely to do that, at least the first time. So if this touches 79, then I'm short the slug trade. Again, the slug trade is a stop run into a major lug. This is the highest winning percentage. This is the one's actually about to get funded too. Then I'll have 2 funded. So this was the stop run. It didn't quite get there, but that's good enough. This is actually Dad too, I think. Hold on. Let's see if there's still a delta divergence. Yes, in the big time delta divergence now. So this is Dad short as well. Extreme standard deviation, 1.5 standard deviation with a stop run, diverging delta. That's an aggressive short as well. So I'll short that too. And that is number 41. Alright, so let me get this. 41. So both of those are at 79. So I moved it a little lower. They should have been at 84. I'd already be filled. But I do my best not to enter trades or stop out of trades in the middle of prior volume events. I don't do that. So that's where my stop is. I have a stop to stop into the trade. Right. Now, if this holds here and does one of these, then I can go short barf as well. Right. So I'll have 3 different shorts on 3 different strategies. But do you see how there's no conflict here? Like, well, I don't know, man. This is breaking out, and it broke through this zone here, and this looks so bullish, and I don't know what to do. If I get my parameters to put my trading parameters for these exact setups, and again, this is part of my trade room. If you come in there, I have these all documented, and you can see the exact description. Because this guy's, it costs money to be in my trading room for good reason. I put a lot into that, and you guys are going to learn a crap load. But it's like people are paying to be in there. I'm just not going to give all this information that they pay for free. Then they come to me and be like, "What the hell am I paying you for if you're going to give out the information?" Right? So I give you guys a ton, right, for just showing you what I'm doing. But if you want the extra stuff like the spreadsheet and stuff, then come to my trade room. I don't think it's very expensive for what I've seen other trade room. Some of these other clowns that actually have no idea what they're doing and claim to be educators. So that's my personal opinion. But this is what I do twice a day, every day. Exactly what you see here, and you will learn how to trade. I can promise you that. All right, so I'm still in this disgusting long that this is not. Again, this doesn't feel good, but you don't see me peeling out of my. I'm not getting out.
We get the
right?
4-week bill auctions.
My trade's on. I have my rules. I stop out of 69. I'm just telling you for how much this thing has been. This thing has fired off probably 20 times since we've been on this webinar, and ES is just and Nasdaq made a higher high. This thing's just sitting here spinning at this spot gamma level. Not good. I'm hoping it does that, but if this comes and stops me out, I'm not going to be surprised. But this is what I'm talking about: discretionary trading. I'm not just getting out here because I feel like this is going to end up doing that. I have my rules in place. Stops me out, I'm out. On to my next trade. On to my next trade. It's probabilities. Show this every webinar. Finally got to a little bit of a rant here. I don't know why this does this every single time now. Right? Let's just go through this quickly. So if you do come in my trade room, the requirement is you get this tattooed, a real tattoo on your forehead. Kind of like a Mike Tyson tattoo. I'm just kidding, but you'd want to read this every day. I'm a consistent winner because this is straight from Trading in the Zone, directly out of the book, except for my stuff, right? But I've added some stuff in here. I objectively identify my edges. What is my edge? My main edge is the edge. This is the edge. You're not going to find, in my opinion, of 25 years of trading, you will not find a stronger edge than the SI indicator. I challenge anybody to show me a stronger edge, and let's go head to head. Let's do a little trading bet over like a 3-month period. All right, predefined risk of every trade, right? So we have there you go. There's the ATR. We have the spreadsheet that you plug it in there. You can understand that it's all explained, but you don't even need it with the spreadsheet. You just plug the stuff in and it tells you exactly what to do. I completely accept the risk, or I'm willing to let go of the trade. Trading the correct size, right? This is what you should be trading. I didn't get into that. The Apex accounts, I'm trading bigger because I'm willing to be more aggressive with that. It's not even especially the tryouts. It's not real money, so I can be more aggressive trying to get funded. It's not a good way to condition yourself on how to trade, as Jorge Labrada pointed out on my trade room. But for me, I can trade 10% of the account size. If I blow it out, I'll just get a re-ante. But if you're trading your real money, you should never be trading more than 1.5 to 2% of your account. I act on my edges without reservations or hesitation. That is what I'm trying to tell you guys. If you can get your rules down, and it's not discretionary, it's you have everything down. We're not trading by your gut, right? And these are, what we're working on.
Nat
right now.
gas ice iceberg by NG. 163 contracts.
Natural gas, damn it. We'll go over there in a second. So this is when when I put on my position trades, this is where I'll get out of pieces. So I try, you should not be trading just one regular size ES or one NASDAQ. Trade 10 micros, and that allows you to piece out of the trade, kind of like I did with my overnight trade. If I just put on one, I had it like on 13. Well, that was basically equivalent to one lot, a little more than one lot. Well, I would have just been completely out of the trade then. Like this way, you can get out at certain points, right? So these are the areas I get out. Ludwig levels, obviously. Market profile composites, highs, lows, POCs. We haven't talked about market profile a ton in this webinar. I'll try to touch on it before we get off. VWAP, extreme standard deviations. We've talked about that at length. Spot gamma levels. Yeah, absolutely. Struggle to get through having rest. This is the reason I got out of that overnight trade, or a portion of it. Important pre-devised zones. That's the Izzy trade. Those are these zones here. These are things that are incredible as well. This isn't rocket science. It's just drawing these zones to the important areas of charting, the 4 important areas of charting, which are tops and bottoms of balance areas, high volume nodes of balance areas, directional conviction, and buying and selling tails. Same structure, same prior SI events. So, say I end up getting. Nasdaq's a good example of that here. So say I do get short the Nasdaq here, I do get filled on this short. Oh, by the way, you guys ever seen this pattern here? I'm sure my trade room just caught that. Here's your ATR retest. So now I can go short BARF as well. So I'm going to put on, I was already going to put on aggressively Dada, Izzy, Slug, and now I got BARF that I'll put on as well. So I got 3 strategies now that I will be short. What could go wrong? Hold on a second, let me put that in. That's at 60, what did I say, 70? 79, right? Yeah. Oh, my stuff's really slow. All right, so now we have, guys, this we literally have this trading strategy for this exact thing. This is more of a really short-term scalp. That's one ATR, retest of the zone. This is what these algos do.
5 minutes
We're
away
joining the
now to get
algos instead of fighting them.
auctions. The US
And that's
selling
this.
$60 billion
That's the
of 4-week
strategy, so we
bills,
can get that as part
with
of my
privates
trade
cover
as
of 2
well.
to 54 and a par high yield of 4.15%.
All right, so let's just see if we get filled here. It's real close to a fill. You can hear it. All right, so now I'm filled. I didn't put it that much out of the zone, so I might get screwed here as far as this could just hang on to the bottom of the zone and torture me for a while, meaning it just bounces right off here and then comes back and does this and does this. But so now I am short 3 different strategies in NASDAQ. I'm still long ES. It's not affecting my ES trade. These are different markets. I'm long one, short the other. I don't like to do that, but that's what my strategy commanded me to do. So that's what I'm long 2 strategies here, and I'm short 3 on NASDAQ. One of them is going to be a winner, I would think, but we'll see. All right, let's see if there's any more questions here. Getting close to the time. If we sign up for your program, do you call out your trades? Yeah, I do exactly what I'm doing here. I'm not trading and it's just for compliance, and it just makes it safer for me where I'm not, people are like, well, he said I saw him put on his trade. I'm talking you through everything. You can hear my trades. You can see the prices in the spreadsheet. Bookmap actually got me the idea. They're like, we're not going to have you just do live trades anymore. And it's just smart. It's just protection, because you never know, You know, the CFTC has very stringent rules on actually trading on the screen, stuff like that. So it's not necessary. I'm talking you guys through everything that I'm doing. And I also say, if you watch the disclaimer, the spreadsheet gives you long and short. So you may think I'm the worst trader in the world and I'm an idiot. You can fade me. It's all right here. So if you want to go long, here's the prices to go long. If you want to go short, here's the prices to go short. You do whatever you want to do. I'm telling you what I'm doing personally. I have the exact disclaimer that actually was talked over a little bit. I should replay it again. Actually, I am going to do that one more time just because. So just watch what I say on this disclaimer. All right? Quickly.
Net gas ice iceberg by NG. 162 contracts.
Of course. Now listen to what I say here. Trade limits, webinars are not intended to mirror my trades or give specific trade recommendations.
Net gas stocks LNG. 154
I guess it's
contracts.
good timing, don't I? Based on my personal analysis. The goal of this room is to teach traders how to identify specific areas to trade within niche for themselves, but ultimately the decision is yours. Trading is extremely risky, and if you do decide to follow my personal trades, you do so at your own risk and could potentially lose your entire account and even more. I'm not always profitable and have routine drawdowns on my trading accounts. The spreadsheet I have access to is my personal spreadsheet that I use to enter zone values and ATR values that help me pinpoint exact prices for my trades. You can see when I enter zone prices into the master spreadsheet as well as the prices to enter trades, whether you want to go long or short. You have the ability to copy the spreadsheet and enter in your own values and use mine to confirm zone prices until you're able to draw the zones correctly yourself. The spreadsheet is not telling you which direction to trade, as it has entry prices and stop prices for both long and short positions depending on which way you personally decide to trade. Got that? No, it's fast. That's what that's telling you, right? So it's just protecting me. I'm not putting on actual, you're not seeing me click the mouse, but you know exactly what I'm doing, and you can do it. You can join me, you can do whatever you want, like I told you. But yes, I do that. This happens twice a day in my trade room. The only days that I don't are Friday afternoons. I go golf because I gotta get away from these. You gotta give yourself a mental break. All right, so quickly before I hop off here, if you got any more questions, throw them in. I'll try to answer them quickly. I'm short. I was supposed to be short 84. Remember, I moved it out of there, but here's my stop. Once I get filled, I don't change this. I should have actually been changing this till I got filled. It's about the same, so not a big deal. But once I get filled, this is the fill price. I don't, so that this contracts down to 15, 12, 11, this would obviously come down to. I learned the hard way on that too, where I will bring it in trying to save money, and then it comes up, stops me at the exact tick, and then ends up going. So whenever I get filled on my short, wherever that stop price is, that's what's staying in. So 13,134 is my stop price for those shorts, for all three of those shorts. So I'm short 3 strategies in NASDAQ.
Surely
I'm long 2
expecting a 4-week
strategies
bill auction.
in ES. I don't know what I'm doing, not looking at natural gas. This is one of the best markets to trade when you got volume setups, because this thing can move 500 ticks in a heartbeat. There you go. Yeah. Let's just quickly see if there's a setup here. I'm hoping this is an Izzy. Let's see. It doesn't look like it. Actually, I did have a zone here. I deleted it today. So this was, because I didn't think it was that important, but it's gapped up from this zone. So this is prior balance here. Yeah. There's not really much here, so I'm not going to force a zone here, but we're in the middle of nowhere there. Let's see if we see anything on the lugs. If not, the BARF is always in play. I can always put the BARF trade on, but I'm seeing there's other strategies here. What am I doing? Natural gas. So this is, let's see, we got new lugs here. You got to refresh this on 0 sometime. No new lugs yet, so that's interesting. So not seeing anything there. So the only thing really in play here is the BARF trade. So your zone for that is, quickly, remember, use your price line. This is where it started. That's right there. Comes across. Remember, so this is what I'm talking about, right? So for me to have to move this chart, I got to come back, take it out of edit mode. So just draw your line, then you can move the line, because now you got to get out of edit mode to move the damn chart. So I got lucky on that one, but usually you have to move it, to the spike end. So that's correct. So that zone, just to show you where I will go long or short, 2.112. NG. I'm telling you, the spreadsheet is an absolute godsend. This thing's worth probably $1 million on its own, right? As far as I'm concerned. 2.106. And when I become $1 million trader again, I am going to give all the credit to having the spreadsheet, because it takes so much off of my mental pressure of trying to get everything right. So So this is the actual, natural gas is weird as far as the ATR, but you can see the two different, this goes in the spreadsheet, this, whoops, don't want to cross it out, this one here, not this one. I don't know why they're different, but they are. They basically just say it's moving about 11 ticks every 5 minutes. 0.01. So there you go. So
It's a
now to
cover
make
2 to
this setup
63, 2 to
bearish
63, and a high yield of
bullish.
4.6%, 4.6%.
This needs a touch.
To the US sells $61 billion of
31.23.
forward bills and awards
Bearish,
54.09% of
2.095.
bids
It's
at
all
high.
based on the ATR and how we trade these areas. Right? So this already looks like it might be a bearish setup now. So I don't know yet. So 23 or 95. So once it gets there, the only thing's in play is a bar. So if this touches 23, then I'll wait for that. I'll go long. If it touches 95 first, then I'll wait I'll take that. Right? So if that happens, then that's disqualified. The minute it gets an ATR either way out of here, the other side's disqualified. That's just the way I trade them, and from watching 4.2 million of these in my life. And then the entry price to go long would be 24, right? Which is an ATR plus 15%, and to go short would be 94. It's basically one tick more than the validation. So hopefully that makes sense. I will be watching that. I think I missed a ton of stuff in here today. There's been stuff firing off in here all morning. Yeah, pretty much the same area, but this is large. 400. That's almost 4 times threshold. So I'm telling you, when natural gas gets rolling, it could be huge. All right, so let's see if there's any other questions here. Is this your room audio only, or do you show your screen like you do here? No, I do everything I'm doing, guys. This is exactly what I do in my trade room, to the T. I show my screen, I show the spreadsheet, we talk about the prices, we go over the bigger picture stuff, what I'm seeing, and there's also times, right, where so say if everything lines up and I have a bear, like for instance, this isn't a good example, but say we're breaking down out of balance, right? This happened on a webinar on a Bookmap webinar a few weeks ago, right? And it comes back into an Izzy zone, and I was just convinced. I just had a strong conviction of the short, right? So, and there was a bunch of things going for it. I knew an Izzy, and there was a bunch of other things. So I traded bigger size in that particular trade. That's called an A+ trade, where you can trade bigger size, but if you're trading your own account, you don't want to be risking more than 6%. Remember, we talked about risking only 2% on an individual trade. Well, you can up this to maybe 4%. You can even trade 6% if you love a trade. But if you lose on it, you got to be ready to shut it down for the day, right? This is the most you should lose on a day. So I forgot what I was getting at there, but you can trade bigger size on. Oh, by the way, that was the day I did trade bigger size, and then Bostic, or whatever the hell his name is, came out with the Fed tape bomb and stopped me out of everything. So that was not a fun day. But then, guys, that's trading. That's why it's percentages. It's not guaranteed. You guys that come in here and saying, I just want to make 500 to 1,000 a day, and I'm good. Yeah, you'll definitely average that if you're a good trader and you have an edge and a profitable trader. You're not going to make 500,000 every single day like you're getting a paycheck. It's not going to happen, especially in this type of trading, right? This type of trading does not lend itself to that. I posted it. If you go to Twitter before I go, this is actually because I love great stories. The whole reason I'm doing this, guys, is to help traders. Like, I just feel I love educating. It helps me keep my head out of my ass, and then I just love. It feels like it's me versus the man now, right? Because I'm the retail trader again. So I just love to show traders like what's really going on. It's a great feeling for me. So anyway, I love when I get great stories for my trade room. So let's see where I posted this just quickly. So this is great for you guys to see. Why can't I find it? There we go. That's my Twitter handle, by the way. I got to start showing all that information. Bruce used to show I like my trade room. So first of all, for my trade room, just go to my website and then go in here. Scott Live Trade Room. And there you can get my course. New course is coming out, but if you come in my trade room when I release the new course, if you're an active member. So just quickly, if you come in my trade room now and you're like, I want to learn right now what this is. This was made in 2020. Still very relevant, but a lot's changed since then. But you still learn the setups and everything. If you buy the old course and you're a live member of my trade room, when I release the new course, which should be any day now, once I get done with it, then you get the new one for free. I'm not going to charge you again if you're an active member. Okay, so just know that. But anyway, you come in here and you click which one you want, and then you also get discounts to the courses, so on and so forth. So that's my trade room. This is what I wanted to show you here. This is one of my traders. This is live. This is a real money P&L. So this, and all this guy's doing is following he's not adding any subjectivity into it with his own reasoning, whatever. He's following the exact rules we're working on in the trade room. And look at this P&L. So this was when I posted it, when he said he made that I'm like, what in the hell, man? You're killing it. So anyway, he basically had one losing day. This, what I was getting at when I was talking about the P&L, this is like an aberration, right? Yeah, not that being profitable is aberration. With this type of trading, you're not going to make money every single day, right? And he even knows this. Because I mentor him too. He does mentoring. He's taken off since the mentoring. But you can learn this all in the trade room too. But the point is, he knows that most trading months are not going to be 95% winning days, right? It's going to be like that. That's what a real trading P&L looks like, right? But this is just, if you know that, then you're not despondent when you have a losing day. You're like, this is just part of it. Did I follow my rules? Tell my trade room every day. At the end of the day, how do you judge yourself? Do you judge yourself on P&L or if you followed your own rules? You followed your own rules, because you're going to have days you follow your rules to a T. You didn't make one mistake, and you're going to have a losing day. That's what trading is, right? So if you know this going in, you're not about to jump off a bridge if you have a losing day, right? So this is a great. I think this is great. And I know more traders are making money in my room. That's the whole goal. I wish they would share that. But most traders aren't keeping track like him either. All right. What am I getting text? Probably get off of the damn webinar. All right, guys, I got to go quickly see if anything else. Do we learn how to draw stop icebergs precisely through the trading room? Absolutely. I actually have. It's right here. You can see this is what my trading room looks like, guys. And you got a bunch of capable traders in there. This is what I want. I want participation. So don't come in my trade room if you're going to be a secret squirrel. All right. But anyway, you come in here. We got the basics. This is the zone drawing. I got a video in here. Here's the Ludwig level I did with her, the webinar. Where I put it in here. Yeah, right here. Live trading example on how to draw zones. Add values to the spreadsheet. So yeah, you learn everything, guys. I'm not going to just leave you to try to figure it out on your own. Eventually, you want to be able to do it on your own, obviously. All right, last questions. Do you have a free trial? No free trials. Guys, this is the free trial. You're watching the free trial. This is what I do. I laugh when people send me that. It's like, this is what I do, right? This is the free trial. The Bookmap webinars are your free trial. You get a discount if you buy a course. If you buy a course, then you get a discount to the room. If you join the trade room, then you get a discount to the course. I qualified for Apex 150 a couple days ago. I had 2 losing days so far. I got to keep the psychology together. Absolutely, you're going to have losing days, and it's very easy to go down this spiral, black hole spiral. So you got to just, and that's the other thing I pointed out in my trade room yesterday. So, when you're trading on your own, you come up with these strategies. You think you have an edge, right? You're like, well, I've seen this work 15 times. This is my edge. And then if it starts to lose, which it will, you're going to have drawdowns. Then you're like, well, shit. Pardon my language. I don't know. I don't know if this works or not. When you see people in my trade room, winner, and pointing it out, posting charts, you can be confident that you have an edge, right? So you don't have to keep jumping from strategy to strategy. Oh, this doesn't work anymore. I got to figure something else out. It works. It's just, you just have to understand how trading works, and you're going to have drawdowns, but you just stick with it, adhere to your loss rules, so on and so forth, and you will be a profitable trader. But I could sit here and show you exact, which the spreadsheet does, buy here, sell here. Guys will still screw it up somehow, right? So you have to learn how to do this and understand it from a mental standpoint that you're going to have drawdowns, and stop screwing up a system that works. This is the bottom line, and that's why I showed that P&L. That guy does nothing but take the reversion trade, the 1 ATR reversion trade that P&L I just showed, and then he takes barfs. That's all he does, and he's just killing it. So I love stories like that. All right, guys, hope you learn. I know I'm kind of all over the place today, but right now I'm still long ES, being tortured, still short NASDAQ, being tortured, and I'll watch natural gas for the barf trade on this. All right, I'm out of breath. Hope you guys learned something. Questions, my email is scott@scottpulcinitrader.com, or you can come in my room, and I'll answer them there. Have a great rest of your week and weekend, and go... I got UConn to win it all. I'll win significant money there too. So cheer for UConn for me if your bracket's